Breaking economy news. Inflation is back, bigger and better than ever. CPI inflation is out, and it is up big. It is a policymaker's dream come true. They wanted more inflation, and they got it. You can clear all those thoughts of deflation, deficient demand, and secular stagnation away because the CPI report says this economy is heating up. Headline CPI inflation is 1.4% year to year today in the report for January 2016, and core CPI is smoking hot at 2.2% year over year. What did you expect? The economy's at full employment, as Fed Chair Yellen admitted before Congress last week, and an economy at full employment starts to move the needle on inflation. Everything is going up. It is striking how of the major categories of goods and services, consumers are paying more for everything. New cars, used cars, clothing, medical care, commodities and services, transportation, shelter. Even commodities less food and energy rose 0.2% for the first time in many a moon. And these were supposed to be held down by a strong dollar and falling import prices, the Fed economic staff maintained. Not anymore. Net, the Fed is behind the curve. While they study the recent developments in markets and economies overseas, they are fiddling while Rome burns. Inflation is heating up here. And the Fed funds rate is under the inflation rate, which means savers are getting a bad deal. Zero rates since 2008 have already bled 8 to 10% of American savings in the banks, drained away real purchasing power, real dollar losses since this policy was put in place. How much longer can this last? Here's what we know. The economy is at full employment, and inflation here in the USA is heating up. Falling crude oil prices and China are having no impact on the underlying strength of the U.S. economy. The economy is strong enough to start setting off the first sparks of inflationary pressures. Classic Economics 101. We don't know if the Fed will put a rate hike back on the table at the March 15-16 meeting, but it ought to be. 5 straight months of 0.2 or 0.3% monthly changes in core CPI. It's a trend. The economy is stronger than they think. Inflation isn't too low. It's the 0.5% Fed funds rate that is way too low. The Fed is behind the curve. Bet on it.